that investors have put this event behind them, and do you reckon that there could be more gains, especially for the European markets?
Well, good morning from London. It seems that we're following the same playbook that we did on US election night, where there was a move very sharply into the red and then quite a stunning turnaround. And perhaps that is now the template for these major global events. So we have got a situation where only 3 hours ago the S&P futures were down 7. They're now up 9. And the DAX in Germany, which was down 100 points, is now up 180. So it is very much a rerun of November the 8th at the moment in Europe.
Nick, hi, good afternoon. And maybe even the Brexit Day template before that. So shall we now make an assumption that this market is now prepared for more bad news out of Europe? Possibility of euro breakdown, the euro dollar going below 1. And if these events actually happen, there will be more of buying opportunities for equity markets?
I'm not so sure I'd rush to that conclusion for equity markets. I think what does seem to be the case is that markets were very much more prepared this time around because, of course, you mentioned Brexit and we mentioned the US presidential elections. It would have been a brave or very foolish investor who didn't at least have some form of downside protection in place just in the event of a catastrophic vote in Italy, followed by an equally catastrophic collapse of the banking recapitalization, which is currently ongoing. So I think the markets were better prepared for this one, and that probably explains why the downside initially was relatively limited, and we did see such a turnaround. But I would say that I think the outcome of the banking recapitalization should be front and center stage from here, because if there is any sign that is faltering or indeed failing, then that is going to be an unexpected negative for investors right now.
Do you think that the FOMC meeting next week will also be a non-event of sorts, purely because everyone is expecting a rate hike, and it seems like that's baked into the markets now?
It would be simply staggering if the Fed were either to do nothing or to do 50 basis points. Having spent all year passing up every opportunity to raise rates, it would be quite incredible for them to go 50. And equally, it would be nonsensical if they were not to move at all, having got the market exactly to fully discount it. So the Fed ought, and I use the conditional tense, the Fed ought to be a non-event for markets. What, of course, we will be focusing on there is the fact that we get new economic projections, we'll get a new set of dot points to agonize over and to analyze over the coming days. So I think the Fed ought to be one of the least market-moving events over the course of the next few weeks, but their capacity to surprise and their capacity to foul up communications should never be totally ignored.
Okay, Nick, the other big point that I've been asking experts is this whole DM versus EM trade. We have seen the US markets, of course, keep hitting all-time highs. Do you think that's run its course? And is it time for emerging markets to bounce back, or do you see more outperformance for the developed markets?
I think what we'll see is investors continuing to watch currency movements, because we often, we always stress that when the currency and the equity markets are moving in the same direction, then that is the basis for a sustainable rally. And I think at the moment we're just in that process of forming a bit of a base, it would seem, in EM currencies. In India, we've come down from those all-time highs in dollar rupee just a couple of weeks ago when we were trading above 68.80. We've managed to stabilize on a 68 big figure. If that stability can then morph into a bit more of a general outperformance by EM currencies, then that would be the sign, I think, for investors to move back into the equity markets. But I think the first clue has got to come from the currency. So unless and until we see a bit more of a sustained up uptrend, and it's certainly encouraging the price action that we've seen in some currencies, not least your own. But until we see that rally being extended, it's probably too soon to make the call into EM equities.
Okay, Nick, thanks a lot for giving us your view, and we will touch base with you once these big